Hello, this is Ken Simpson with the Stocks to Watch for the week of June 9th, 2019. The following is for educational purposes only. Nothing to follow should be considered investment advice or a recommendation to buy or sell any security or a recommendation to participate in any particular trading or investment strategy. Trading involves risk of loss and you assume all of that risk. I am not your investment advisor. If you want someone to blame for your losses, hire an investment advisor. You can follow me on Twitter at Crystal Bull. The charts you're about to see were created using MarketSmith, which is a registered trademark of MarketSmith Inc., and they've been enhanced with a custom Chrome browser extension that I wrote. You'll see certain colors and things that are not available in standard MarketSmith. Please don't ask MarketSmith for a copy of the extension, and please don't ask me because they will not give me permission to distribute it. All right, a few things to go over this week, so let's get started. Okay, we'll start here with the Crystal Bull timing indicator. This is the trading indicator that you see. This is updated every 5 minutes during the trading day. You see that the trading indicator did very well, picking up this top, exited here, and picked up the bottom, re-entered the market here. Okay, this is pretty much out of phase of what the IBD market pulse did, but we were really proud of this indicator and it's doing a great job for us. You can see the indicator down below picked up this as overbought and picked up these conditions as oversold, and indeed the market did rally. Okay, that's what we're looking for. And what does this look like on a MarketSmith chart? So here's the NASDAQ 100, and we've overlaid some of the IBD market pulse calls here. You can see they called for a correction right here at the bottom. Remember, they're telling people to exit their stocks here. They're not trying to pick the bottom. They're basically telling you to get out, run for the exits because the market's falling. The market rose from there nicely. The pink arrow here, that's the Crystal Bull timing indicator. Sold here, said that the market is overbought. Market sold off, and the Crystal Bull timing indicator entered back here, right on the close on this day, right at the bottom. IBD market pulse just called market back into confirmed uptrend here, so they're just re-entering here at higher levels. They sold here, and they bought here. Red line, orange line here that you'll see, that's what would happen if you follow the IBD market pulse for their ETF strategy. The blue line is the Crystal Bull trading indicator against the NASDAQ 100, beating the market there. Just had a nice up week here. So where are we today? We'll start here with innovative industrial properties. It's a REIT, not terribly fond of REITs typically, but this one has a beautiful looking technical pattern. Rose nicely, put in a base, and just broke out. The person could have bought here on this day, which was Thursday, a really nice day for volume, and it did break out, but it pulled back, and it's right back in the buy zone here. Okay, this is funds from operation. We'll call that sort of the equivalent of earnings for a REIT. 135% growth and 147% revenue growth, quarter over quarter. Fantastic. 98 composite rating and 2.5 stock checkup flaws, 0 debt for a REIT, which is remarkable. Anyway, right here at the buy zone. Okay, next up, Upland Software, cloud-based software. This is a pretty rare ascending base. Some of the old timers will tell you that's their favorite pattern. A few that I've traded in the past couple of years haven't worked that well, but here's an ascending base, which is supposed to be a powerful pattern, and it's below the buy point here. So we're going to watch this. We're going to set an alert. If it gets to the buy point, a person could put a sloping trend line in this as well. We'll do that right now. Having a little problems with our MarketSmith today. Let's see if the line works. And it doesn't. All our alerts disappeared. Anyway, 43% earnings growth, 53% sales growth. It has a lot of debt, 313% debt to equity ratio. That's a red flag here, but it does have only 2.5 stock checkup flaws and a 99 composite rating. It's a growth story. If you look at their earnings here, very healthy, nice expectations. It's only 4% expectations for 2020, but anyway, it's doing nicely, and it's coming out of a base into an ascending base. Something to watch here. We've got our alerts going. HubSpot. Now we've been following this here for the past many weeks. It keeps trying to break out of this flat base, and it pulls back, breaks out, pulls back. This actually failed. This is a full-on base failure here, but it's coming back. A person might want to take a stab at this if it were to get back to the buy zone from this base back here, but this is looking a bit more like a topping action than anything else. It's got fantastic numbers, 140% earnings growth, 33% sales growth. This red arrow means it's had 2 quarters of deceleration in earnings. Earnings are still growing, but it's decelerating. The earnings change is coming down from 467 to 208 to 140%. Anyway, could be topping, but it's got 5 stock checkup loss, 97 composite rating. You know where to sell it if it were to fail. You could put your stop loss here, which would be about 8% below. So you've got a couple of signal exits there if it were to fail. But anyway, nice company, just not doing well lately. CHGG. Now we marked this as a double bottom, and it did break out, and this would have been the time to buy it. Anywhere, it's still in the green zone, it's still in the buy zone. This is a shakeout plus 5 to 10%. Sloping trend line across this would have put the buy somewhere in there, right around the 38.80 mark, something like that. Still very close to that. Still very buyable if you believe in this double bottom. 50% earnings growth, 27% sales growth. Decent earnings growth here, expected. 4 stock checkup flaws, 99 composite rating. CHGG is one to watch. EPAM. All right, had a beautiful run up here and sort of put in a top, put in a base, and it's trying to come back. All right, why we're following this week is this day, huge volume, and the price really didn't change much. So this is a lot of changing of the hands, a lot of different ownership now. Close to a power of 3, where you've got the 3 moving averages. You could use those as a support level. If it fell below those, you could exit this, or you might just want to wait for a pivot to buy this thing. We'll go ahead and set that alert. Okay, and decent earnings and sales growth, 2.5 stock checkup flaws, 99 composite rating. Great run up and put in a base, which is what we're looking for. WWD, Woodward Inc. Had a decent run up here and putting in a flat base. It's kind of shallow, it's only 8%. Anyway, it just started to break out on decent volume and pulled back. So we've got the alert set to go off if this were to break out again, coming off this really shallow flat base. All right, but it has had a nice run up. Great earnings and sales growth. 6 stock checkup flaws, 98 composite rating. RGEN, Repligen. Okay, Repligen put in this base. We pointed this out last week. We've been watching this. Here was a beautiful breakout. All right, so this would have been the day to buy this. A high volume breakout above the buy point. Now, is it still buyable? The rules are to try to not buy it above the top of this blue box. That's the 5% above the pivot point here. This is barely above that. A person might not have had much of a chance to buy this if they had a day job and weren't paying attention. So it's pretty close to where many people might have entered this. But if it were to fail from here, you are in a little strong. You probably don't want to let this go all the way down to minus 8%, which would be way down here. You'd probably set, some kind of a stop loss here along maybe this line, maybe sloping trend line, something like that, if it were to fail, because you are buying this a little bit out of the buy zone. But it's got great numbers: 65% earnings growth, 35% sales growth, 2 stock checkup flaws, no debt, 97 composite rating. Anyway, that's one to look for. All right, it's out of the buy zone, but they're taking a little bit of a shot, but a decent company. Kirkland broke out and pulled back into the buy zone. Real nice breakout volume here, and it's back in the buy zone. All right, nice earnings and sales growth, and almost no stock checkup flaws, 99 composite rating. Decent earnings growth here, although in 2020 they've got it listed at 0 growth. And that's something to pay attention to. We'll go over that in a second. Sienna is back from the past. Here's an ascending base. It broke out, and guess what? It failed. So this is one of those ascending bases. It's supposed to be a real powerful base, and it did break out, but on earnings it crashed. So I put in a basically a double bottom here. Now this is a breakout day, huge volume, right, finished at the top of the day and just gave you another chance to enter here. So if a person were to enter this, you certainly wouldn't want to let it start to fill this gap. You could put your stop loss here at your typical, this is minus 7%, the bottom of this pink bar, maybe minus 8%, but it is viable. It just announced earnings and took off. All right, 109% earnings growth, 18% sales growth. It's got 8 stock checkup flaws, but you've got a decent double bottom here. And Marcus Smith is not picking this up as a double bottom. I think it should, but anyway, it's right below the pivot point. You can set an alert on that. Yeah, and it showed up. What do you know? Okay, we'll go over earnings on these in a second. Lululemon. All right, now we own Lululemon. We bought it back here, and it's done very well for us. It hasn't come. This is our sell rule sound box. When it gets to any of these boundaries, we're going to have to make a decision what to do with this. We've extended it broke out of a new base, so we extended the patience time. So we'll hold on to this a little longer, but guess what? It put in a new base, and it's below the buy point. The sloping trend line looks something like this. Marcus Smith a little bit picky sometimes, and then there goes my alerts. Anyway, I'm gonna have to restart Marcus Smith. It's really buggy right now. You got earnings in 3 days, so you can't buy this thing until you have earnings, and hopefully they're blowout, and you get a chance to enter this, and we take off. All right, but we're watching this. We're not buying it. We're waiting for earnings. Twitter is back into growth stock territory. Put in a long cup with handle. A little bit of a weak handle here, but it is a handle indeed, and a sloping trend line means you pretty much buy this thing here if you wanted to, if a person wanted to. 131% earnings growth, 18% sales growth. This company eventually is going to start making money. This is getting more and more traction. You've got a president that blasts stuff on there all day, and it's bringing more and more people for pro and con of whatever side of your politics are. That's getting more and more active, and if they figure out a way to sell you ads or product, this thing should have a lot of room in it. 94 composite rating, 5 stock checkup flaws. Etsy, a person could call this a double bottom. It's 22% deep. Okay, if you just call it a base, a flat base or consolidation. Sloping trend line looks something like that. All right, but it's got 140% earnings growth, 40% sales growth. Really nice. 2 stock checkup flaws, 95 composite rating, and we know what Etsy does. Okay, and you have a exit here if it were to break below this base, this intermediate low. Don't have to wait for a 8% pullback. Lastly, Pump. Petro. Okay, now this had a beautiful run up and put in a double bottom. We put the shakeout plus 5 to 10% here, and then it pulled back again. So you have to squint here to see a new double bottom. It's sort of a triple bottom. This was a real shakeout in here on volume. So we did have another shakeout. So we're going to just keep this on the watch list. If it gets back into here, we'll have to make a decision then. If it hits our alert. Have to take a look and see if we consider that a true double bottom. Beautiful run up. Nice double bottom entry here would be nice. 60% earnings growth, 42% sales growth. Got a long time until earnings, 5 stock checkup flaws, and 88 composite rating. Now quickly, let's go through these on the weekly so I can show what 12 trailing months earnings looks like on these stocks. Okay, IIPR is REIT, so we don't have earnings for that. So we don't have a way to track the 12 trailing months earnings. We'll just move on to the next one. Upland. Okay, nice earnings growth. This is 12 trailing months earnings, and it keeps on going. Beautiful. All right, we like that. HubSpot. Kind of topping here, but same thing. Beautiful. Chegg. Okay, now Chegg is expecting a deceleration of earnings, something to pay attention to. All right, that's gives you some pause here. Expectations are for this to slow down. Okay, EPAM. Again, a deceleration in earnings expected. Not good. Woodward expecting flatten out of earnings. Not too great. Still okay, but not great. Repligen. It's been a little topping here, but and expecting it to slow down a bit. Still, you have some earnings growth. Kirkland keeps on going. Tighten this up. Sienna. Really nice earnings growth expectations. Right, that's why we have this on here. That was an explosive day. Blue dot here on the RS rating. Lululemon, a little bit of topping action here on earnings. Let's go back in time. Doesn't look so bad if you go all the way back here, but it is expected to decelerate just a tad. Twitter, okay, not great, but okay. Etsy. A little bit of topping action there in Etsy, and Pump expected to grow nicely. Anyway, that's it for this week. We hope you have some success here. Remember, nothing in this was to be considered investment advice. May have sounded like it at times. That's just talking to somebody as if you were to buy, but I am not recommending that you buy any of these. I pointed out some of the flaws in some of these as well, so you got to just be careful here. But IBD Market Pulse is confirmed uptrend. The crystal ball trading model is in the market. And so we want to be buying things if they look good to us. And thanks for watching.